What if I told you that a single American foreign policy decision just handed China its biggest geopolitical victory in Latin America? Because while Washington was busy celebrating the return of Venezuela to the negotiating table, China quietly added 20 more countries to its orbit. And the playbook they're using? It's the same one that kept China at the center of the world for 2,000 years. Let's start with what just happened. In early 2025, the Trump administration made a dramatic pivot on Venezuela. After years of maximum pressure, crippling sanctions, and diplomatic isolation, Washington suddenly shifted gears. They engaged in direct talks with the Maduro government. They signaled openness to sanctions relief. They even discussed potential oil deals. On the surface, this looks like pragmatic diplomacy. Venezuela has the world's largest proven oil reserves. America wants stable oil prices. Maduro wants recognition and economic relief. Simple, right? Wrong. Because while America was focused on oil and migration, they completely missed what China was doing in the background. And what China did was brilliant. They didn't celebrate America's Venezuela pivot. They didn't protest it. They simply waited for the inevitable backlash from Latin American countries who've been watching American foreign policy whiplash for decades. And that backlash came fast. The domino effect nobody saw coming. Within weeks of the Venezuela announcement, something remarkable started happening. Countries across Latin America and the Caribbean began accelerating their economic partnerships with China, not because they love China, not because they hate America, but because they learned a lesson that's been repeated throughout history. You cannot rely on a partner who changes direction every 4 years. Brazil signed massive new infrastructure deals with Chinese state banks. Argentina finalized its integration into the Belt and Road Initiative despite its new pro-Western government. Mexico quietly expanded trade agreements with Beijing. Ecuador, Bolivia, Peru, Chile, all of them moved closer to Chinese economic orbit. Even Colombia, one of America's most reliable allies in the region, started hedging its bets with expanded Chinese investment in ports and energy infrastructure. 20 countries, all moving in the same direction, all in response to the same signal. American foreign policy is unpredictable and unpredictability is expensive. But here's what makes this moment historically significant. China didn't force this to happen. They didn't invade. They didn't threaten. They didn't even lobby that hard. They just offered something America couldn't: consistency. The tributary system 2.0. Let's go back to the first sample we discussed about China's tributary system. For 2,000 years, from 206 BC to 1911 AD, China maintained a network of international relations where smaller kingdoms acknowledged Chinese cultural superiority in exchange for trade access, legitimacy, and protection. The system worked because it was voluntary. Countries joined because they benefited. They could leave if they wanted, though most didn't, because participation was profitable. Vietnam fought wars for independence but then voluntarily rejoined the tributary system. Japan participated for centuries before deciding to end the relationship in 1549. These weren't colonies held by force, they were partners held by mutual advantage. Now look at what China's doing in Latin America today. The Belt and Road Initiative isn't colonialism. Chinese companies build infrastructure. Latin American countries get roads, ports, and power plants they desperately need. China gets resources, markets, and influence. It's presented as win-win. Is it actually win-win? That's debatable. Critics point to debt traps, environmental damage, and corruption. But here's the thing. From the perspective of a Latin American government, Chinese investment comes with far fewer political conditions than Western financing. The World Bank wants governance reforms, anti-corruption measures, environmental standards. The IMF demands austerity, privatization, labor market flexibility. USAID ties funding to democratic benchmarks and human rights improvements. China? China wants to build a port and buy your soybeans. They don't care who you elect. They don't lecture you about press freedom. They don't threaten sanctions if you don't vote their way at the UN. This is the modern tributary system. Acknowledge China's importance, participate in their economic ecosystem, and you get benefits without political interference. Why Venezuela was the perfect test case. Venezuela has been economically destroyed by decades of mismanagement, corruption, and sanctions. The country sits on massive oil reserves but can't extract them efficiently. Infrastructure is crumbling, the currency is worthless, millions have fled. China saw opportunity where America saw failure. While the U.S. was sanctioning Venezuelan oil, China was buying it at a discount and extending credit lines. While Western banks refused to touch Caracas, Chinese state banks provided billions in loans backed by future oil deliveries. While American diplomats isolated Maduro, Chinese companies built refineries, power plants, and telecommunications networks across Venezuela. By the time the Trump administration pivoted toward engagement, China had already secured decades of oil supply contracts, billions in infrastructure investments, and deep political relationships with Venezuelan elites. The American move to negotiate with Venezuela didn't hurt China. It validated their approach because now Venezuela can play both sides. They can negotiate with Washington while maintaining their Beijing backstop. And every other country in the region saw this happen. They saw that China stayed when America left. They saw that Chinese investments continued when Western companies pulled out. They saw that Beijing maintained relationships through political transitions that Washington abandoned. The lesson? When you're a developing country trying to build infrastructure and grow your economy, consistency matters more than ideology. The economic mathematics of soft power. Let's talk numbers, because this isn't just about philosophy and grand strategy. China is now the largest trading partner for Brazil, Chile, Peru, and Uruguay. They're the second largest for Argentina, Colombia, and Mexico. Over 60% of Latin American countries have signed Belt and Road agreements. Chinese investment in Latin America exceeded $150 billion between 2005 and 2023. That's more than the World Bank and Inter-American Development Bank combined during the same period. But here's where it gets interesting. Chinese loans come with higher interest rates than Western development financing. They're often less transparent. They sometimes create genuine debt problems. So why do countries keep taking them? Speed. A Chinese state bank can approve a multi-billion-dollar infrastructure loan in months. The World Bank takes years of environmental impact studies, feasibility reviews, and stakeholder consultations. A Chinese construction company can break ground within weeks. Western contractors spend months navigating local regulations and labor laws. When you're a Latin American president with a 4- or 6-year term and you need to show economic progress to win re-election, Chinese speed beats Western due diligence every single time. This is soft power through economic efficiency, and the Venezuela situation just demonstrated its effectiveness to the entire region. The gunpowder lesson applied. Remember the second sample about gunpowder? How China invented the most important military technology of the medieval world, but Europe weaponized it for global conquest. Chinese strategists study that history obsessively. They see it as a warning. Innovation without strategic deployment equals defeat. Technology without geopolitical leverage is worthless. Modern China isn't making that mistake again. They're not just investing in Latin America, they're building dependency relationships. Venezuelan oil fields use Chinese equipment. Brazilian ports are built to Chinese specifications. Argentine power grids run on Chinese technology. Ecuadorian telecommunications rely on Chinese infrastructure. This creates switching costs. If you want to pivot away from China, you have to replace entire systems. That's expensive, time-consuming, and politically difficult. Western technology companies used to do this. American companies like IBM and Microsoft created ecosystems where switching costs made competition difficult. Now China's doing it at the nation-state level. They learned from gunpowder, invent the technology, control the deployment, ensure you benefit from the network effects. Why this matters beyond Latin America. The Venezuela pivot isn't just about South America, it's a signal to the entire developing world. Africa is watching, Southeast Asia is watching, the Middle East is watching, and they're all drawing the same conclusion. America's foreign policy is hostage to its domestic political cycles. Every 4 years, everything can change. Allies become adversaries, sanctions get imposed or lifted, aid flows or stops, military commitments expand or contract. China doesn't have this problem. Xi Jinping isn't facing re-election. The Communist Party's strategic planning operates on decades, not election cycles. When China commits to a project, it gets built. When they sign a treaty, it lasts. This creates a massive advantage in the competition for influence among developing countries. Think about it from the perspective of a Nigerian or Indonesian or Kenyan leader. You need infrastructure. You need investment. You need access to large markets for your exports. You can partner with America and get lectures about democracy, human rights conditions on aid, and the constant risk that the next administration will reverse everything. Or you can partner with China and get infrastructure financing, market access, and consistency. It's not that developing countries prefer authoritarian governments, it's that they prefer predictable partners. What America missed. The tragedy of the Venezuela situation isn't that America tried diplomacy. Diplomacy with Venezuela makes sense. Sanctions clearly weren't working. Economic engagement could potentially help the Venezuelan people. The tragedy is that America approached Venezuela as an isolated bilateral issue instead of understanding it as part of a broader competition for global influence. While U.S. policymakers were focused on oil prices and migration, they missed the signal it sent to every other country in the region. If America could sanction Venezuela for years, collapse their economy, and then suddenly pivot when it served American interests, what's to stop that from happening to anyone else? Brazil saw this, Mexico saw this, Colombia saw this, and they all adjusted their strategies accordingly. They diversified their partnerships, they deepened their China relationships, they hedged against American unpredictability. China didn't need to do anything aggressive. They just needed to be present, consistent, and willing to engage without political conditions. The historical parallel. This moment mirrors a transition we've seen before in history, when one global power's influence begins to wane and another rises to take its place. Britain to America, Rome to Byzantine Empire, Song Dynasty to Mongol Empire. These transitions aren't sudden, they happen gradually, through thousands of small decisions by third-party countries choosing which power to align with based on perceived reliability and mutual benefit. Right now, we're watching that process unfold in real time. Not because America is weak. The U.S. economy is still massive. The U.S. military is still dominant. American cultural influence is still unmatched. But influence isn't just about power. It's about predictability, consistency, and mutual benefit. And in those categories, China is competing effectively. What happens next? The next 5 years will be critical. If America continues its pattern of dramatic foreign policy shifts every administration, more countries will hedge toward China, not out of love for Beijing, but out of rational self-interest. If America can develop a bipartisan, long-term approach to Latin America and the developing world, they can compete effectively. American investment, American technology, and American markets are still incredibly valuable. But that requires something difficult in American democracy: consistency across political transitions. China doesn't have to win this competition, they just have to be present while America self-sabotages with unpredictability. The Venezuela pivot wasn't a mistake. Engaging with Caracas makes strategic sense, but doing it without a comprehensive regional strategy, without understanding how it would be perceived by other countries, without coordinating with allies, that was the mistake. And China capitalized on it perfectly, just like the tributary system capitalized on regional dynamics for 2,000 years. Just like European powers capitalized on gunpowder for centuries of global dominance. History doesn't repeat, but it sure rhymes. The bottom line: 20 countries moved closer to China because America's Venezuela move reminded them of a fundamental geopolitical truth. Consistency beats power when you're choosing long-term partners. China isn't winning because they're more powerful than America. They're winning because they're more predictable. They're not offering a better system, they're offering a more reliable partnership. And in a world where developing countries need infrastructure, investment, and economic growth, reliability matters more than almost anything else. The tributary system lasted 2,000 years not because China was always the most powerful empire. It lasted because participation was voluntary and beneficial. Countries joined because they gained advantages. Modern China is rebuilding that system, not through military conquest, not through colonial control, but through economic integration, infrastructure investment, and consistent engagement. America can compete. American values, American innovation, American markets, all of these remain powerful assets, but only if they're delivered consistently. Only if partners can count on American engagement lasting longer than one presidential term. The Venezuela pivot was a test case, and the result? 20 countries decided to hedge their bets by moving closer to China. That's not just a policy failure, it's a historical inflection point, and we're living through it right now. The question isn't whether China wants to be a superpower. The question is whether America will adapt its approach to remain competitive in a multipolar world. Based on the Venezuela example, that adaptation isn't happening fast enough.